Hey everybody, this is Greg coming in with another Fundrise video. Today we're going to be going over week 7. Oh my gosh, week 7 update for Fundrise. And we'll get digging into that in a little bit here, but just make sure if you like this video to hit that like button, subscribe if you like what you're seeing. Everything new that comes out, you'll be able to see it right away. Without further ado, we'll just get into this and we'll start hitting the Fundrise update here for, again, week number 7. We're up to 351.11, which is a net return of $1.11. We finally broke $1 coming back from Fundrise. We can see the dividends are 49 cents. The appreciation is 64 cents. I know in the last video I was like, oh man, I wonder if those dividends are going to go above the appreciation, which for a day or two, it actually happened. I had more in dividends than I did in appreciation, and then the price of the NAV on the funds actually went up a cent, so it popped over. So we see that we're at a -2 for advisory fees, so we're hitting 2 cents for that. So that's that $1.11 total that we have for the 2021 year to date, all time as well, since we've just started this. So we can see we're at 350 I have in the fund, and this chart is just getting a little smaller and a lot more dots coming in on it, as we can see, because this is an update from every single day. What did kind of surprise me here was I thought this was going to be coming more in the next package up, the next account level was a goal level, but this kind of just popped up on my account the one day. But the thing is, the only option you have for a goal is to build wealth, which is obvious. So if we check this out, I can say get on track. My target amount right now is $150,000 because I'm putting in about $100 a month right now, $50 every other week. So they say $95 to get me to $150,000 by 2051. 30 years. I kind of just put in 30 years to see what it would look like, because again, I'm going in for the long haul. So if you look at this, it just kind of gives you a nice little chart of the projected area for every year, and a range. So it'll give you a low and a high range for what you're looking at. So the actual value right now, $351, and the estimated, and then you can just do the both with the nice little blue dot of where you're at right now. So as this updates, this dot will move and it'll show the beginning. So you can go in and you can edit your goal. You can say, okay, yeah, we're building wealth, which is what I think I called it, just because that's the goal that it gave us. I put in the amount by the end of the year, which I can't change, and you can change the year that you want to do that, and you can also see your progress to the goal, which we're at 0% because we're only at $351. So they're suggesting that you go at $95, and you can, if you have an account, you can go in and you can play with this. I don't know if everybody has this, but this just kind of showed up this past weekend here, so there you go. So you can save that goal, it'll save it, and it'll go back into your main thing. Your main dashboard here. So no real news on the account yet, so I haven't been posting a lot of updates on the interval account and what it's been doing. We can go into my details a little bit more here, and we can see, the unpaid dividends, 49 cents. Although I did get an email that at the end of September, these dividends are going to be paid out, and we're going to start seeing it refresh into the account. So once that does happen, I'm going to have an update video on how that kind of happens and what the price is, if it's done at the current NAV price, or if they do something a little different there, and how much that'll actually come out to, which 49 cents is not going to buy a whole lot, especially when it's like $15.87, I think, per share. I'm sorry, $10.87. Ooh, that $5. So I am sitting at 27.658 shares at the price of $10.87. That's at $300, and I do have $50 more coming in, which I think is coming out at the $10.86 price. So not a big deal there, but you can see the appreciation and the unpaid dividends here, along with the advisory fee. Still have 30 projects in here. We're ramping up. That's going to be like that for a while, I think. I wonder if that'll ever change, because they're going to be always changing this fund, and they're always going to be adding in and taking things out. So I'm not exactly sure how that's going to work yet, but we'll cross that bridge when it's time. So we see that it's at $10.87 for the interval fund. It's at 2.31% for the current distribution rate. Nothing really crazy or added there, but we'll go to the track record and kind of do an update here. We're looking at 1 year of 7.3% return, 2 years is 16.6, 3 for 26.3, and 37.9 and 52.9. I think the only thing that changed on this from my last week update is this 4 years just dropped a point of a percentage. So not a huge difference here, but depending on how much money you have invested in this, it could be a lot of money. They did add down here the annual return of client accounts. So you can see the past 5 years, the Fundrise, all in the positive here. That first year was a big year, 10.63%. The first half of 2021 was 5.62% return compared to public REITs of 21.19%. I can say, and this is all U.S. REITs and all clients here. So when they say all U.S. REITs, they're combining it all together and just kind of giving you a highly objective look of this, I would say. 21.19%. I do have public REITs that I invest in, and I can kind of say, yeah, this is about the norm. That's what I'm looking at right now in my accounts that I have. And then they also compare it to the public stock market, the S&P 500, the first half of 15.25. So as you can see, if you're investing just in Fundrise, it's not a whole lot, 5, almost 6% compared to public REITs and public stocks. And you're like, oh, but Greg, look at the difference there. You're talking about 10 to 15% difference. What's going on? But if you look at the years past, public REITs last year got hammered with COVID and the pandemic, so they were down negative, and then even in 2018 they were negative. Public stocks have been pretty good. They also had a negative year. So public stock, the S&P, if you're going into like VTI or VU or something like that, you're going to be seeing that positive for the most part. You're going to have those off years like you had in 2018, but you're going to see positive there. So that's why it's good to have like I've been saying, a diversified account where you have money in stock market, money in REITs and public REITs, and also in something like Fundrise where it's just a constant, because as you can see, it's been 18 positive quarters for Fundrise, where their worst quarter was 1.15%. Their best quarter was 4.18%. They had 0 negative quarters, and they have an average income return of 5.86%. In public REITs, you're looking at 16.7% as their best quarter, negative 25%, with 15 positive and 3 negative quarters, with an average return of 4.35%. I would love to see the math and how they came up with this and just see every quarter broken down, just to kind of give us a little bit more of a transparent view on this. Same thing with the stocks, 20.5 for the best positive quarter, 19.6 for the worst quarter, again with 15 and 3, and the best of 2.2, or average income return of 2.26. So I would like to see the transparency on this. But again, this kind of shows you how much you, as an investor, should try to diversify a little bit, because in a lot of cases, you'll have a negative on one part of your whole portfolio, but another part just kind of keeping it afloat. And we look down here in the income through dividends. We'll see $138,235,41 for net distributions to clients, and you can see the currently declared annualized yield for balanced income growth, the 3 with the weighted average, and then the 12 months, the last 12 months that they have there as well. And I think that's it for that. And let me just go over to my channel information for you, if I can find that. There we go. And kind of give you some stats on my channel. We have hit over 500 views. We did that last week, right after I posted my week 6 update. So we're currently over that threshold. For the past 28 days, I'll give that statistic just so I can go back and look at this. We're currently at 15 subscribers. That's plus 6 in the past 28 days. 334 views, so we're scaling, and a watch time of 22.6 hours. Now, for the lifetime of the channel, we're looking at, let me get that up here. I thought I had that. The lifetime of the channel, we're at 580 views. Again, with the 15 subscriber count, 41.4 hours of total watch time over the whole period from the beginning of August to today, which we're nearing the end of September. So we're at week 7 of the channel, and that's great. So again, if you like what you see, please make sure to hit that like button. And if you do like what you're seeing completely, make sure to hit that subscribe button and that little bell so you can see new information coming up. I'm going to be doing a little bit more different things. Somebody asked about ground floor, so I'm going to try and investigate that a little bit. I created an account and went in there. It looks a little, I hate to say a lot different than Fundrise, but it's definitely different in how you invest. So I will be making a video on that, like kind of a little introductory video on that. I haven't put any money in there. I haven't dropped anything in there yet, but I would like you guys to see the interface and just see what it's all about. So again, if you like what you see, hit that subscribe button, hit the thumbs up, and we'll see you next time. Take care.